Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA. Here now, Frank Napolitano from Mortgage Brokers Ottawa and Paul Rushforth from Paul Rushforth Real Estate.
Halfway through the month of August already.
Crazy, like that, eh? Yeah, it's crazy. The summer's gone so fast. And I knew it would too. Our weather's been incredible. We've had no rain.
Strokes, a couple of little heat. Too hot, but boy, I know myself included will be complaining 2 months from now when it's the other way around. It's too cool. I'll want the heat back, but
me too. I prefer the heat over the cold.
Me too. I mean, I'll take that every day. But it's been great. I mean, for our business, it's been good. And again, I think a lot of people are getting their vacations in, which is wonderful to see. And school starts early this year. I mean, Labor Day, I think, is on the 2nd of September. So school, I think, starts the 3rd or 4th. And there's some school boards that actually start this coming week. The French school boards start this coming week. So
and sports are starting up again, too, right? Like I always say when my kids' hockey started up and my daughter's synchronized swimming, I'm like, when that starts up, like summer's over. It's back to work. And, and this is a time of year, too, where not only consumers and people are going on vacation, but realtors and mortgage brokers. And so it's always, I find July and August always hit or miss. You never know if it's going to be a quiet market, a quiet month, what's going to go on. And, we saw July a little pretty quiet and, the numbers didn't say that, but we saw July pretty quiet and August is similar. It's
summer.
Yeah.
Like I said, I honestly believe a lot of people are away on holidays. A lot of people are taking time. They're traveling across Canada this year, so we're seeing a lot of, and we need it because obviously if Air Canada is going on strike, I think tourism's going to get hit hard right now with them on strike, and a lot of people rely on tourism. So a lot of businesses in most cities, so everything can help. And if you stay in your own country, which I think Canadians have done very well this summer,
agreed.
It's been really good for our economy here in Canada.
You're seeing a lot of, I don't hear very much people going to the States right now, obviously, but a lot of Europe and a lot of Canada is what I'm hearing is like, I'm going out to Banff, I'm going out to, to BC out west, or I'm going to London, England, or Paris or somewhere like that. So I'm seeing a lot of that. And it's, hey, listen, I always make a joke when I'm on with my, my real estate coach who's from Dallas and also down in California. He's got 2 places there. And I'm like, you know what? I got no agents here this week. And they're like, what do you mean you have no agents? I'm like, it's summer here, Tom. Like, we don't live in Dallas and California. And
we've only got this 2-month period.
We literally have 2 months to enjoy ourselves. And listen, half our office was away, like our admin staff was away. The agents are, obviously we have a lot to conduct the business, but it's, when we have 15 agents and sometimes there's 6 or 7 who are away at the time. So it's healthy. I think it's normal. I think that's good.
Oh, and I think to the point you were saying, Frank, Canadians are staying in Canada. I drive around the city all day, every day, taking photos of homes, and I'm seeing a lot of out-of-province license plates, but not out of country. I'm not seeing very many American plates up this year. So I think Canadians are traveling in the country.
Yeah, I agree. And Americans are still coming here. Excuse me. Only because, number one, they get 40 cents on the dollar when they come here. So that's an advantage of coming here. But at the same time, a lot of Americans feel bad for what's happened to Canadians and going through this trade war because they feel it was unnecessary. And that's not the way you treat, a country that we've been really best friends with for forever. And all of a sudden now we're treating them like they're the enemy. And a lot of Americans don't feel like Canada's justified of being treated that way. So that's the way that they're returning, showing how good they are by saying, you know what, we're going to go to Canada and we're going to spend some money there. And we're going to help the economy, which is nice.
Anyone who hasn't listened to the show in the last couple of weeks, obviously we have a new voice in the host chair. We got Greg Tilley from my company, who's the... We'll say he's our guest host, but I'd say he's our permanent host. And Steve, if you're wondering where Steve Gregory is, obviously Steve is taking some time off with his family and decided to take his weekends back. So we're going to miss Steve, but just in case people are like, where's Steve? I don't hear his voice. So Greg's the new man in the helm.
We miss you every week, Steve.
Yes, we do. It's not the same. Certainly after 18 years and 906 shows, it's taken some adjusting, but you're doing a great job, Greg, I think. And, I feel like you're doing really well, and we miss Steve, and Steve set the barrier really high for you. So.
You know what's funny? I was telling you guys just before coming on here, I sent Steve a message, and I'm like, Steve, I need you to do a commercial for me. Here's kind of a parameter of what I need to say in this commercial. Within a few hours, comes back, and it's just so perfect.
Yep.
And I'm sitting there with Petra, and she's like, He is so good,
Yes,
and I'm
he
like,
is.
he is darn good. Absolutely.
Like I said last week, like it's just an honor to sit in the studio with such a professional broadcaster.
Agreed.
You don't experience that level of professionalism often in any profession, but oh man,
I
it
can
was
tell you
amazing.
one thing though: the age in the room has definitely come down.
The average age is much
sorry,
lower,
Steve. I know you're listening, and I know you're rolling your eyes right now.
Yeah,
so.
thanks, Steve. I'm the oldest guy in the room now. Thanks.
All right. So speaking of economy, tariffs back on, back off.
I don't know.
How's that
they're
affecting?
on. I mean, we've got a week doesn't go by where there isn't an issue of tariffs, whether it's with the U.S. There's one with China right now where they're not happy at some of the tariffs we're putting on based on the steel because they put tariffs on us on canola. So, it's this game that you go back and forth. And I wish the word tariffs just would, let 2025 end and let's get the word tariffs out of our vocabulary moving forward because we've heard it more this year than all the years combined together. So, but they do hurt the economy. I mean, you got the president saying that all the billions of dollars it's brought in, but that money has come in on the backs of Americans, and it's hurting Canada as well in a couple of. But we still have that free trade agreement, which doesn't expire until next year. So that's going to be the challenge for next year for our government. But in the meantime, it does hurt the economy a little bit, which may be good news if you're looking for a lower interest rate. And I think those lower rates are coming. It's just, again, we need to see. We got the inflation. So Tuesday's a big, big day on Tuesday.
Right.
Because on Tuesday, the inflation report comes out here in Canada. And,
but we're still a month away from a rate announcement, though.
We are. But this, we saw the job report come in, and it was very, very weak, both in Canada and the U.S. And if the inflation report can come in just a little bit weaker, it's not going to be very, very weak. But just, if the core inflation could be down, if the regular inflation, the overall inflation stays in that 1.9 to 2.1, we're good. If the core inflation can come down into the mid-twos, then I think there's some motivation there for Tiff Macklem maybe to consider lowering prime rate on September 17th. But
I think they know it has to happen sooner than later.
They do.
You've talked about 2026 and 2027 are going to be really tough years for consumers, for Canadians, if we can't get these rates down. So I think in the back of their mind, yes, they have to follow the metrics in order to do that. They can't just do a Trumpism and just lower rates, you know. But I think that hopefully these rates start to come down because in 2026 and 2027, when a lot of these people are renewing, their mortgages are renewing, it's going to be a bit of a sticker shock for some people. And so that's not going to be pretty. Yeah.
I agree. Next year's a big year. And not that 2027 isn't. I think the difference between next year, 2026, is that anybody took out a 5-year mortgage in 2021, they saw their house appreciating quite nicely throughout the year and into 2022. So therefore, when their mortgage does come up for maturity, yes, their interest rate's going to go from 1.5 to 1.9 all the way up to, probably in the high 3s, low 4s. So that's significant, but at least they built up some equity. I think the reason 2027 is important is because we saw anybody that bought their house in early 2022, probably that was the peak of the house prices. And between now and then, 2027, they might be back to where they started originally, but they got good interest rates in the first half of 2022, and then they went up as 2022 went on. But they might be coming off of 2% mortgages and having to go into a high 3, low 4, but they don't have the equity to fall back on like anybody that bought in 2021. That's going to be the difference.
And keep in mind, back then we peaked at an average sale price here in Ottawa of just over $740,000. Right now we're at $702,000.
Right.
So, we've seen a lot of prices come down over that time frame. And you're right, when people are, having to renew, they bought, unfortunately, at a really, really high time. And, I say real estate's the long game, but when you buy at that time and you have to renew your mortgage after 5 years, it's a gulp. It's a big gulp, and it's going to be ugly.
Agreed. And we're Ottawa, Ontario. We're accustomed to 2-3% increases a year, and we've really thrived on that for many, many years. And there's the odd year where it goes up 5 or 6%, but we rarely saw what we saw during COVID, and then we rarely saw what we saw after COVID. So the two, again, if you bought at that right time, you're laughing. If you bought at the wrong time, you're kind of going to be a little bit stressed in 2027 once that mortgage comes up for renewal.
Have we ever seen that kind of increase in the past, Paul?
Never. We went up one year, it was like 22%. The year before that was like 19 point something percent. And then the year before that, I believe, was 8 point something percent. So we went up like 50% in a 3-year span, which is unheard of, right? So,
in Ottawa,
as the average sale price. Whereas, at the time, before the market started to take off, you were getting a townhome in suburbia for $330, $340, and then
even less.
Sometimes less. But the most popular townhomes were selling in that $330, $340 range, and then it felt like overnight they were in the 4s, and then the 5s, and then the 6s, and then we saw some in the 7s, and
edging into the 7s.
And I actually saw some of the bigger ones selling in the 8s. So like the appreciation in those 3 years, especially for the townhouse market, which is what we're seeing right now during COVID. After COVID, when the slide happened, when the prices were going down, the townhouses were the ones that were getting beat up the worst. Those prices were coming down the hardest. Right now, the townhouse market is the hotter of the markets. It's almost up 9%. So the townhouse market right now is just starting to make a rebound and is becoming a very popular product.
Yeah, we need to get first-time home buyers back, and the only way to get them back is by interest rates coming down.
100%.
So, until that happens, I think everybody wants interest rates to come down, but you're right. The economics have to fall in line for Bank of Canada and for the U.S. Treasurer to be able to say, okay, we can start dropping again by that quarter point, maybe 2-3 times over the next 6 months.
Absolutely.
521-TALK, 521-8255. We'll be right back. I didn't interrupt the new
intro?
The new intro this week. I nailed it this week.
I love the new intro, actually. It's good.
So just before the break, we were talking about popular products, townhomes, you were saying. Are investors coming back in looking at products like that? What's happening?
Well, yeah. I mean, Frank just touched on, first-time home buyers, obviously. And I kind of lumped the first-time home buyers and the investors in the same category because as the rates were going up and the prices were going up, we were seeing a lot of first-time home buyers leave the market. We were also seeing a lot of investors leave the market. So whereas before people were buying doors like crazy, as the rates went up and the prices started to go up, they were no longer cash flow positive. They're starting to get a little bit better. If we get into some good news in the rate announcements, the prices have already come down. So we are starting to see some investors come back into the market. Obviously, the biggest downfall right now for investors and things they're scared about is tenants, because it's a nightmare.
Right.
It's a nightmare in this city. Well, not just this city, in this country, when it comes to tenants' rights. They way outweigh the landlord's rights, and it's a scary proposition. It really, really is. I know personally, I'm going through some nightmare situations for my clients, and also I have one myself. But I have some clients that are going through absolute nightmare situations with tenants. And actually, Frank, we talked last week about a website that you said you knew of that. We know of.
Yep.
You have any information on that? The website that people can blast tenants on?
I do, and I thank Kathy McDonald from our one of our mortgage agents who listens to our show religiously, and she texted me the information because she's had a number of clients that have gone through it. The website's called openroom.ca, and this website was put together by an individual who went through the pain of trying to evict the tenant and not able to evict the tenant. Took 2 years, lost $35,000 worth of rental income, and just everything that she experienced, the anxiety that went with everything, and she said was so stressful that she felt like she had to start a website to inform other people of what the pitfalls are of, becoming a landlord. And actually this website caters to tenants, it caters to paralegals, it caters to realtors, it caters to landlords and property managers, because it's meant for everybody to come together and be able to get out those, what they're called professional tenants. I mean, I call them rip-off tenants, but professional tenants who know the system and know how to get around the system of getting away with not paying rent. And it's so unfair because, a landlord can go to the bank and say, listen, my tenant's not paying me. And the bank's not going to say, well, we'll give you a break. Don't worry about it. That's not the way it works. That landlord still has mortgage payments. So, like this individual, $35,000 they had to put out of their pockets.
They still had to keep paying
that
mortgage. They still had
to keep the mortgage, even though they weren't getting the rental income. And that hurt them financially hard. So kudos to this individual who started this website.
So basically,
and it's extremely popular because
just troubled tenants. You just put troubled tenants on this website, opendoor.ca.
Everything, I believe, if I'm not mistaken, I haven't done all the research, but you can probably put good tenants in there too. I mean, they're not all bad.
No,
we just have a small percentage of bad ones that seem to take over us talking about it, where probably 80-85% of tenants are probably really good people who maintain your house the way you would expect it to be maintained and pay their rents on time. Like, they respect the fact that they have a place to live.
I actually, going through this nightmare situation that I'm going through, I actually showed a place to someone the other day, and it was a tenanted property, and I walked in, and you could literally eat off the floors. It was so beautifully clean, and I said, the tenants were there, and I actually said to them, "Thank you. Thank you for the way you're keeping this person's home so beautiful and treating it like it's your own home, and like a beautiful place to live." And I'd like to think a large chunk of tenants do that.
I agree. I think they do.
It's the ones that don't do that don't pay their rent, that won't move out when it's time to sell the property and things like that. Those are the people. You called them rip-off tenants. You're a lot nicer than what I called them in my mind. You're a lot nicer. Because
we can't say that on air.
Well, listen, I know how hard I had to work
to
buy my first investment property. I know all the sweat and equity and heartache that I had to go through to buy my second rental property. To have someone either trash it and treat it like garbage, or not pay me rent when I still have to pay the mortgage,
or both,
like, shame on you. I walked into one time, and she was getting ready to move out. They had to obviously pay her to get her out because they're putting it on the market. But I watched her animals just go to the bathroom on the carpet, and I was like, "Your dog just went to the bathroom." Whatever. Like, didn't even care. But like I said, I'm not, this is not a witch hunt against tenants, because I do believe there's some wonderful tenants, and I've had some of the wonderful
majority,
tenants.
For sure.
It's just the bad ones. It's like, you get one bad one, it ruins it for everybody. There's so many bad ones right now. And I think what happens when you get all these chat rooms and all these groups where they get together and they say, well, you can do this, don't do this and that. And I honestly believe the biggest downfall was when Doug Ford came out during COVID and said, if you can't pay your rent, just don't pay. That changed it for a lot of people. And I think that was probably the dumbest thing that ever came out of his mouth at that point, because guess what? There was a lot of people who had investment properties who would have loved to have not paid their mortgage either, but that wasn't an option, right? So it was that changed things when Doug Ford did that. And I think ever since then, I'm still a huge endorser of investment properties, a huge endorser, because I do believe it's the best way to build wealth is through real estate. It's not the only way, but in my opinion, it's the best way. So owning doors is amazing. You just have to do your due diligence. You have to make sure that you've done your homework on your tenant. And I always say to my tenants, listen, you treat this place like gold, I'm going to treat you like gold. You treat it like garbage, you and I are going to have a big problem.
So what should an investor be doing to vet tenants?
Well, one, I believe you obviously should work with a realtor to help you do that. But to vet tenants, I know so many people that don't even do a credit check on tenants. Whereas, like, you better be doing a credit check. You better be calling the references on that credit check. Now, keep in mind, the references are always their buddies who will vouch for them and things like that, or someone who's really happy and likes them a lot. What I'd be doing is I wouldn't go to the last landlord that they had, because that landlord would probably lie to get them out of their place. I would go to the two previous landlords and say, how was this person as a tenant? Because those are the people who've already got them out. They'll tell you the truth. So that's what
they don't have any skin in the game at that point.
They don't have any skin in the game at that point. And I think that's what I would be doing to find out what kind of tenants they actually were. Because I'm looking for someone who's going to treat it like it's their property, like it's their place. And unfortunately, there's a couple rotten apples that have made made investors a little weary when it comes to buying investment properties right now. But we're starting to get to the point where the rates are starting to come down. Prices are reasonable now. A lot of things are cash flow positive now. It's now you just have to do your due diligence and make sure the tenant part is in your favor.
Yeah, and you've got a bad tenant, it's even hard to sell your property.
Impossible.
Because if they're not cooperative, then all of a sudden, now here's a landlord or an investor. And a lot of people think that these investors are all these rich corporations. Most people that own these properties, at least the majority that I've run into, were maybe a young couple that bought their first home townhouse. built some equity in it, and then all of a sudden they were ready to buy a single home because they've started their family, and they decided to keep their townhouse. Like, they're a hardworking family who worked really hard to get that townhouse. Now they're going to keep it and try to, again, acquire wealth through real estate over the next 20, 25, 30 years, rent it out at a reasonable price and be able to have the tenant at least pay their mortgage for them. They've done everything in their future. They've done everything right, and then you get a tenant that takes advantage of them. And all of a sudden, like, they're just probably barely making ends meet with having to carry their single home and their family, and now they got to make an extra payment because the tenant's not paying rent. It's just totally unfair. The system seems to be unfair. I hope there's a fix to it. I'd like to think that a website like this, and as many people that have written on it, they get 100,000 visitors per month and 2 million per year searches. Like, that
I think that'll keep tenants honest. That'll keep them honest.
But not everybody knows about this website. Nobody.
What's the website again?
Openroom.ca.
Openroom.ca.
Well, those that listen to us are a little bit smarter because they're listening to us, obviously. But we got to get it out there for sure. And I think I'm going to try and get who started this website and see if they would guest with us on the show, because that would be fantastic.
That'd be amazing.
Yeah.
521-TALK, 521-8255. We'll be right back. So, Frank, what do investors need to know about financing a property if somebody's looking at getting into investment properties?
Well, you need to be, number one, you need a minimum 20% down payment if it's an investment property. If you're getting a 2-unit where you live in one unit and you're renting the other one, then you can buy with as little as 5% down. But as long as you've got some owner-occupant. Now, we get a lot of calls saying, Frank, if I bought a townhouse and I rented out 2 rooms, can I do it with 5% down? And the answer is, yeah, you can, but I can't use the rental income. It's not a legal dwelling. It's not a legal rental dwelling. So you need to qualify on your own with your own income. And as long as you qualify with your own income, then great. I mean, if you're renting out a couple of rooms and it's helping you pay the mortgage, good for you, but you could still do it on your own without having to count on that rental income.
So Frank, before the break, we were talking about how hard it is for somebody to actually get into be an investor. And when you just said that, like, just a context there, the average sale price in Ottawa is $700,000. 20% is $140,000.
Yes,
that's a lot of money for someone to come up with to buy their first investment property. And that's why I think we took that shot earlier about, people work their butt off to afford an investment property, and to have someone take advantage of that is so wrong. Wrong, because that's a lot of cake.
It's a lot. So again, you look at the average price here in Ottawa, $700,000. You're a first-time home buyer. Even if you buy it with 5% down, 5% of the first $500,000, $25,000. 10% of the next $200,000, another $20,000. That's $45,000. You get a land transfer tax rebate, but you still probably going to need $55,000 if you're buying a $700,000 to close on it. By the time you put the remainder of the land transfer tax, your legal fees, your home inspection, the property tax adjustment, because the property taxes in Ottawa are paid by the middle of June for the entire year. If you take possession of the property September 1st, well, you owe the vendor 4 months worth of property taxes. So
I was doing some training with one of my new agents this week, and one of the questions that he was on land transfer tax, and he's like, "Well, how much is land transfer tax?" And of course, I said, "Well, let me show you an example of this." And then we went through the land transfer tax, and it was something ridiculous, the amount that it came up to. And then he's like, "Is there any advantage for first-time home buyers?" I'm like, "Yeah, they get $4,000. He's like, $4,000? That's it?
Yeah.
And I think you were saying last show, like, you were hoping that actually changes, and
because
$4,000 on a house that land transfer tax is $20,000, $25,000, $30,000.
When it came out, whatever it was, 10, 12, 14 years ago, that was awesome. I mean, if you were buying your first home, you didn't have land transfer tax because the $4,000 took care of it, kind of thing. With the average home being at $300,000,
right?
Then now that the average home in Ottawa is $700,000, never mind Toronto. I mean, if you buy in the 416 area code, not only do you have Ontario land transfer tax, but you also have Toronto land transfer tax, which is the exact same calculation as the Ontario. So whatever the Ontario one is, double.
Wow.
So you buy a $1.5 million home, which isn't that big in Toronto. I mean, you're not getting that much for $1.5 million. You're looking at $60,000 in land transfer tax.
In just tax.
And that's just like a here government, take my money. Yeah.
Never get it back for anything, because it's like when you buy a car, you pay the tax on it, and then when somebody else buys that used car, they pay the tax on it again. The first person who paid the tax doesn't get it back. That money is gone.
Right.
Same thing on a house. That's why we always say, when you're going to buy a house, especially first-time home buyers, I know you're in a rush. I know you're excited to buy a home, but make sure you get a really good realtor and make sure that you're not settling on a home just because you want to own a home. Because where you can return a pair of jeans, you can return other things you buy. Returning a home is extremely expensive. We're talking tens of thousands of dollars.
Right.
So you want to make sure you don't settle. If the home inspection, outlines that there's some serious flaws in the house, walk away from it. Don't get emotionally attached to it until you've checked off everything that needs to be checked off before you get emotionally attached to it.
Well, speaking of great prices on homes, you had a big announcement this week to our team.
Yes. We are hosting the grand opening for Clement Homes. So everyone's heard Charles on the show before. We represent Charles at Clement Homes as our builder of choice. And we have a grand opening in a new subdivision in Russell, Southwest Park. And it's the grand opening, ribbon cutting, everything is happening September 7th between 1 to 4. It's a Sunday, September 7th, 1 to 4. Southwestparkhomes.com, southwestparkhomes.com to check out some of the townhomes that we have on display there. The model home is opening that day. It's going to be spectacular. There's we have hundreds of townhomes going up in that subdivision, and they're building fast, and they are starting in the low fives, which is unheard of. A townhome with hardwood, granite, plush carpeting, high-end kitchens, concrete party walls, starting in the low fives. So,
and where are they again?
So we have them in Rockland. We have them also in Russell. So this grand opening is actually in our subdivision, our brand new subdivision in Russell. Amazing subdivision, and there's tons of homes already on the go right now. And our model home opens that day, which is going to be September 7th, 1 to 4. Come on out and see me there and tour the new model home for Clement Homes. It's like I said, a townhome starting in the low fives. Southwestparkhomes.com to see a little bit more information on that.
How's the construction coming along on those? When are if people are interested, when they're looking at possession?
Almost now. We're starting to...
The first units are...
Yeah, we have possession starting in September, October, some going into December, and then some obviously into the next year. Every day, well, not every day, every week, we get a drone shot from the builder with how the progress is going. And I'm like, what? There was a hole in the ground last week, and now there's a roof on there. It's insane how fast they're going. And the one thing about Charles is he does a lot of puts a lot of attention to detail when it comes to things like his curbs and his grass and his tree planting and all that stuff. And so he turns a patch of dead grass into a beautiful subdivision. So come check it out. Like I said, September 7th, 1 to 4, southwestparkhomes.com. We'll be there, have some goodies for the kids and some champagne, and then come tour the home and see how Charles really sets himself from the competition.
They're beautiful homes. He does a meticulous build for sure.
Meticulous.
Yeah, he's been on our show a couple of times, and well-respected home builder here in Ottawa. So
yeah, and the nice thing about Charles is he's I wouldn't say he's a large builder or a small builder. I'd say he fits into that medium category where he's selling a couple hundred homes a year, which puts you into a medium category. But when you're selling that many homes, you think you're going to have some things that happen where your reputation takes a bit of a kick because when you sell that many homes, there's got to be something wrong with them. I've never heard anyone who's bought a Clement home who said anything negative. And in fact, a lot of our buyers now are past Clement home owners, where they just go to a different home or they go to a different subdivision, or maybe they've come from a condo to a townhome now. So we got a lot on the go right now. We got townhomes and condos on the Rockland Golf Course in Rockland. We have the Southwest Park subdivision in Russell right now going on. So there's a lot of building going on. So come check us out on September 7th.
So Frank, any people looking at brand new homes, what do they need to know in terms of?
Well, I was a little nicer going in there if you've got your pre-approval done in advance, so that at least you know that if you fall in love with the house and you want to make an offer on it, you've kind of got a heads up knowing what your costs are going to be like on a monthly basis based on the mortgage rates at the time. Depending on how far out the closing is, will determine whether that payment is guaranteed from a standpoint of, if your closing is within 4 months, then we can lock in that rate. Then if rates come down between now and then, you'll get the lower, but at least you know your worst case scenario. If your closing is 6 months, 8 months, then, depending on what's happening. Now, it feels like interest rates are coming down anyway, so I don't know that you have a lot to be worried about. If your closing dates in the spring, the likelihood is that the interest rates will be similar to or hopefully lower than they are today. So you should feel fairly confident about being able to put an offer in and knowing that you're financing where you're going to stand on your financing. Once you see it, most times, it's nice to go in there with that pre-approval because people do get emotionally attached once they see a new home and they see themselves in there and their family in there. They get really excited, and the last thing you need to do is now it falls through on financing. So, I would strongly encourage, if you're going to go look at open houses, have a pre-approval in place in advance so that, that you can put an offer. I don't know how busy it's going to be, that weekend. It might be very busy. So if you're looking, where you're renting now might expire, and the timing might work out perfectly where your lease expires the end of November, and there's a house available the middle of November. So you want to be able to jump on it as well. So that's what I would say in scenarios like that.
And typically you can hold rates for
120 days. I mean, we've got some lenders that'll give us the 6 month and the 1 year guarantees, but the rates are not as competitive if you're holding them for that long.
Right.
But like I said, I mean, if the interest rates are trending where we think they're going to be trending, then I don't think you have as much to worry about, because the likelihood is that interest rates should be similar to and or a little bit lower by the time your extended closing comes to.
And you're going to get the better of the.
You're going to get the better of them
rates.
all. Yeah, up until your closing date. So any mortgage you get, you're supposed to get. And again, the banks won't automatically do it. As mortgage brokers, most mortgage brokers will stay on top of the interest rates and what we have to do. So if you bought a house today and your closing is November 1st, we can guarantee a rate for you. But the lenders tell us, like, you need to float it down. We're not floating it down automatically. So if rates come down, they're not going to drop it unless we instruct them. Same thing happens at the banks. The bank person, when you bought a house, isn't going to call you and say, by the way, the interest rates have come down today. Congratulations. Great news. That doesn't happen. You actually have to initiate it.
And most people aren't on top of the rates. Let's be honest.
They have no idea.
Yeah.
Whereas a mortgage broker, we stay on top of it for you. That's another advantage of working with a mortgage agent broker.
I mean, Matt, as a home buyer, you're excited about getting into that house. You're thinking about how you're going to set up. You're not thinking about what your rate is.
So you've already stomached that rate. Like Frank told me, my rate's 409. Okay, that's my rate. But I'm so excited. I budgeted for that, but now the rates come down and you don't get a call about that. That's frustrating. You have to stay on top of that. But I guess with you guys, that's just an automatic.
No, the really good mortgage agent brokers obviously stay on top. Is there a handful of them that won't? Of course there are. But the good ones, you deal with a good mortgage agent, mortgage broker, 100% that they're going to stay on top of what's happening with rates. And if that rate comes down, they're instructing the new lender, hey, we want the lower rate. Some lenders have this one float down policy where you're only allowed to float it down once.
Oh, that's BS.
It is BS, because when it happens a second time, I write them, and if they say, yeah, you already used it, I said, so you're willing to lose the deal over it.
Yeah, because you'll
trying to be clear right now. So I'm going to bring it somewhere else. So if we're going to lose the deal, then don't come back to me and say, why'd you pull the deal? You know why I pulled the deal. So you have a chance here. I'm giving you first dibs at it. But if you choose not to, then don't come back to me, because look in the mirror. You lost the deal because you weren't competitive enough. And that's what we do on behalf of our clients.
521-TALK, 521-8255. We'll be right back. So last week we were talking about how the numbers are with the sales. Things are moving pretty steady in the market.
Yeah.
How are sellers responding in the market? How are they feeling about it?
It's weird. I mean, there's zero appetite, and I've said this before. There's zero appetite for overpricing a home right now in this market, and there's literally zero market for homes that like here's a story. One of my agents calls me. He's like, "Paul, I got a difficult one here. The seller wants to sell, wants this price. I think it's too high, and he won't do anything to the house." And I said, "Okay, what are we talking about? Like a kitchen, bathrooms, all that?" He's like, "Declutter." I said, "Hold on." He wants top dollar, but he will not declutter his house, like a little elbow grease. And I literally said I wouldn't take the listing. Like, I wouldn't take the listing. If the seller is not committed to doing a little bit of work and doesn't want to listen to your price and doesn't want to be realistic on price, it's not worth taking the listing. Because we know how sensitive this market is to appearance and to price. And so there's a lot of sellers that we've had to have the conversation. We had a seller this week who who rightfully so came and saw me, and he's frustrated. He's had so many showings. We can't get the property sold. But he rightfully so said, you know what? I listed with another agent before you, and I tried to get greedy. I wanted to go for the home run. And I said, First of all, bad on the agent for allowing you to go for that home run in today's market. But so now look what's happened. You tried to go for the home run, and now you're hurting yourself. Right now you're hurt. You're hurt because your sign's been on the ground. Now we ended up selling it this week, which is perfect. But I said to him, you're probably going to get less in your pocket, because you got greedy and tried to go for the home run at the beginning. So you're probably selling for less than when you would have if you would have priced it properly. You would have got it sold quickly. When it sells quickly means you usually get your dollar. Instead, now you're already down, $50,000, $70,000 from when you're previously listed with another agent. We are going to get your home sold for you, but now you're probably getting less. By the time it's done, you're going to get less in your pocket than if you would have done the right thing right off the bat. So that's the appetite right now when it comes to selling. Most sellers are getting it though. When we were coming out of COVID, they weren't getting it because they thought everyone was, still pricing it way up here and selling way up here. But sellers have started to get a little bit more realistic, but you can always tell the ones that aren't realistic. And listen, I'll go through a search. Someone says, hey, tell me about the townhomes in such and such area. I'll go through a search and I can look at the pictures, just the pictures alone, and say, guarantee I can look at the days on market, and this home's been on the market for 45, 60 days. Oh, and it's priced too high, and it just sits and sits and sits. And then I see a beautiful home that hits the market, and literally I'll say to myself, that one is priced perfectly and is beautiful. This thing will sell within the week, and it sells within a week. So if you price it properly and it shows well, and sometimes it's elbow grease. And listen, if you're sitting here going, well, I'm not putting a brand new kitchen, a brand new bathroom, spending all that money. I get it. I wouldn't either to sell.
Nor should you.
Nor should you. But you definitely have to price it accordingly. So someone who has to come in and put the brand new bathroom and the brand new kitchen in there. So it still has to be priced accordingly. But there are some things that you can do. Declutter, cleanliness, paint, light fixtures. Just those are the little things that you can do that don't cost very much money. I would always do that. Always do that. You don't have to do the big ticket things. Sometimes if you're selling your property, you just price it accordingly. So, but good question, Greg. I mean, it's frustrating. Well, you go in tons of homes. So you tell me, you can go into a home and you can think to yourself, this thing's not selling.
I don't even have to go in. I can tell you when I pull up out front and you
30 seconds, eh?
30 seconds. You
30
look
seconds.
You look at the quality of the landscaping, and I can tell you that inside is meticulous. It's beautiful, and if it's priced properly, it'll be gone.
Yeah. And to be fair, I mean, I don't know, landscaping's hard to look at these days with the dry summer we've had. So I think a lot of people look at the grass, it's like, they don't take care of it, but it's been impossible.
It's been tough.
But walking into a house, a lot of people say, like, Frank, so, we're ready to put an offer. I said, yeah, but just, again, don't settle on a home, and you'll know the 15, 30 seconds in. You can either envision yourself in that house or you can't.
I would love to one day sit down with you, Greg, and just pick your brain about some of the things you've seen. And because you've been in 40,000 plus homes that you've shot. I'd love to see some of the stories.
Top 5. We got to do a top 5 one.
Oh, we should next week.
Worst things you've seen, and maybe
I don't know
top 5 most amazing things that said, "Wow, I would buy this house."
Yeah,
just because of that.
Absolutely.
Yeah, it'd be nice to see it on both ends. So,
birthdays, Frank?
Yeah, I've got a Nella DePaulo, my good friend Mike DePaulo's wife, celebrating her birthday. She's 4 months older than me. But we're going to Europe together, and I can't wait to spend some time together and celebrate her birthday. So, yeah.
Amazing.
Yeah.
I have one Tuesday. My dad, Superman turns 83. He's going through some health struggles right now, but it's a big day for him, turning 83 on Tuesday. So happy birthday, Dad. And just
you taking him out? Where are you taking him out? You normally take him out, like I've seen you around.
Yeah,
right? Around this time
we'll
of
do
year
something.
where...
He's not as mobile as he wants to be right now, so might be a dinner at home or something like that. Something
nice.
like that.
Nice.
And just a reminder before we leave, come see us at the grand opening in Russell, southwestparkhomes.com. It's September 7th, 1 to 4. Come see me there, have some champagne, and enjoy one of the Clement Homes' beautiful townhomes.
Amazing. Have a great week, everybody.
Awesome, and please continue to support local businesses and charities.